Hi everyone, hope you guys are all having a great day today. In today's video, I'm going to cover the whole entire market in terms of Dow Jones, Nasdaq, and S&P 500, including the economic calendar. Now, I do post these videos daily, so I highly encourage you to double check the latest video on my channel so that way you get the most up-to-date information. And before I get to the technical analysis portion, I'm going to go over the economic calendar. And now for Friday, August 30th, 2024, at 8:30 a.m., we have the following. We have personal income nominal, personal spending nominal, PCE index, which is PCE inflation numbers coming out, and then PCE year over year, core PCE and PCE index, and then core PCE year over year. And at 9:45 a.m. we have Chicago Business Barometer PMI, and at 10 a.m. we have consumer sentiment final. Now, one thing to note: these PCE inflation numbers are highly regarded as more accurate for the Fed versus the CPI and PPI inflation numbers, and then they tend to look at usually more for the core PCE year over year, which has energy removed from it. And previously it was 2.6%. This time around they're expecting 2.7%, so slight increase. But I've noticed in terms of the media narrative, whatever is more favorable. So if it's core PCE or PCE that is not core, which includes energy, the reason why they don't include energy is because they state that it's very volatile. So sometimes it's fluctuates in the high side for the most part, or in the low side, quite in a volatility kind of standpoint kind of thing, right? So because of that, they take it out and they look at the core PCE. But I've noticed in the past, for example, mind you, if the core PCE comes in at 2.8%, right, or 2.7%, but then they see the PCE year over year comes in at 2.4%. The PCE year over year that is not core has energy included in the calculation. Energy might have just slightly dropped during this time period, and they got 2.4 inflation versus previously 2.5 and versus 2.5 expected, right? But then for core PCE, they get 2.7, which is as expected, but a slight increase. But they could spin it off as inflation is decreasing because the expected 2.7 got received, and then yet they are hypothetically beating inflation. I don't know, but that's what I've noticed in the past. This is all just my opinion, so please do your own due diligence and research before buying and selling. But this is what I've noticed in the past in terms of the media outlets when they post inflation, stuff like that, so on and so forth. But yeah, there's that. Mind you, by the way, Monday, September 2nd, 2024, Labor Day holiday weekend, all that stuff. So the markets will be closed, just FYI, for Monday. Now, the thing is, though, in terms of analysis portion, I'm going to be looking at SPY, which is an ETF for S&P 500, and then I'm going to look over Nasdaq and Dow Jones and so on and so forth. And the SPY is the exact same thing as S&P 500, just a different ratio. That's all it is. And in terms of where we're at right now, we're closed at $558.35, and we are at all-time high zone, basically, for the most part. I'll zoom out right about here. You can see it. So all-time high. The only thing is, though, obviously, clearly having a hard time to pass it. Now, I want to state one thing. Technically, in a way, the market is indicating a small pullback. And the reason why I state a small pullback is based off MACD lines. MACD lines indicate if we're in a bearish or bullish movement. And for the short term, obviously in the long term, the markets all tend to go up, right? But in terms of like short term and then long term, I would say for the short term, it's indicating downside based off MACD lines. And MACD lines indicate if we're in a bearish or bullish movement, and currently in the bearish movement, hypothetically. Now, the reason why I'm stating that it's a small pullback is I'm going to show you guys the 1 year charts, right? Now, the 1 month, 3 month, 6 month, all of them for Dow Jones, Nasdaq, and S&P are showing downside. Now, I should state, though, because inflation numbers are coming out tomorrow in terms of PCE inflation numbers, looking at MACD lines is not necessarily the best thing because you could almost throw them out the window for the short term or even technically the trajectory for the long term, because it could alter the trajectory for long term as well. But for the short term, especially throw them out the window, because if the inflation numbers comes in way better than expected, then even though the MACD lines are hypothetically pulling to the downside, the market will just go up regardless, right? And if they come in way worse than expected, then at the same time, if the MACD lines were pointing to the upside, then you could expect that the reverse will be to the downside based off the horrendous inflation numbers, because inflation numbers are coming higher than expected, right? Now, what I want to show is, again, the 1 month, 3 month, 6 month for the Dow Jones, Nasdaq, and S&P 500 are showing downside. But for the 1 year chart, this is the S&P 500, and it's showing a curvature to the downside. Now, mind you, it is still bullish, but it could be getting pulled down. And then Nasdaq, same thing, closer to getting pulled down, right? The volume ticks have been more selling versus buying. And then I believe the S&P 500, same thing, more selling versus buying. You could argue the sell volume is not as high as previously, so it is kind of slowing down, and then for the Nasdaq, it is increasing versus slowing down. So it depends. Nasdaq does have a higher pull, I'd say, because it is more tech sector. But for the Dow Jones, this is the part where it's kind of throwing me off. The Dow Jones is more of a smaller sector, by the way, and it's not necessarily arching down. So technically, because the 1 month, 3 months, 6 month are more for the downside, technically, potentially the next few trading days could be going down, small pullback, but then ultimately reversing back to the upside. And at the same time, what I've noticed in the past, when Labor Day weekend ends, the markets sometimes get an uptick a little bit because everybody comes back from probably some kind of holiday trip or so on and so forth. But that's not always the case, obviously. I would say it's more of a driving factor based off inflation numbers. So whatever the inflation numbers come by, that will dictate more of the case for the upside and downside. And then technically, in a way, I would still say you could almost expect a small pullback. But the Dow Jones could be indication that that pullback might not be seen fully. Again, more based off inflation numbers we're going to have to visually see first. Now, in terms of the levels that we could be expecting to hit, if you are expecting the upside, again, this is the S&P 500, looking at SPY, mind you, closed at $558.35. If you're expecting the upside, regardless, inflation numbers coming in, great, so on and so forth, then what you could be expecting is potentially resistance at the moving average. And that resistance would be roughly about $560 and some change. And then the next level I'd be expecting for the most part being resistance is pretty much the all-time high level for the most part, which is about between $563 and some change to $564 and some change. And then ultimately, if you want to count pre-market and after hours high, that is $565 and some change. Can we go higher? Obviously we can. If inflation numbers are way better than that, then I expect to break that and create new all-time highs for the S&P 500. Mind you, though, if you're thinking the narrative of the pullback is going to happen and inflation numbers is just like subpar for the most part, then you could expect to come down to the downside in terms of potential first level of support could be at the 557 and some change. I just don't expect that to hold that much. It'd be more of the 556 and some change within the zone right about here where I've seen support levels, and then ultimately the 555 and some change. And then you could expect support at the 556 and some change based off the moving average as well, not with just this zone right about here. So in my opinion, that would be the lowest. I don't expect anything crazy because the data points that the Fed keeps, basically from what the Fed stated is they stated that rate cuts is now a good time to be happening in essence. And because of that, I'm assuming that they're expecting no surprises. And if they're expecting no surprises, then I'm not expecting any surprises from inflation numbers that are coming out, so on and so forth. And that has been the case for the past numbers that have been reported. But if you're expecting all doom and gloom heading to the downside, I would expect to hit these two zones. So the first zone would be the 550 and some change. And not necessarily a full drop, obviously, but the 550 and some change is based off the resistance here, support bounce right about here, and a support bounce right about here at the 550 as well, and some change. So the 550 and some change goes across quite a bit of touch points, and then there was resistance right about here, but like multiple touch points regardless in terms of resistance support at 550. Can we go lower? Obviously you can, and then the next level would be 548 and some change. I personally do not think we're going to go lower than 548 and some change, especially since the S&P does not move so dramatically versus the Nasdaq. Now for the Nasdaq, in terms of the price points, mind you, closed at $470.66. This is for ETF QQQ, which is the exact same thing, just different ratio. That's all it is. And in terms of the upside, so now this line, in case you're new to the channel, dates back since 2010, right about here. Upward trend resistance line dating back to 2010. Mind you, the market was still going up. It doesn't mean it wasn't going up. Just every time it went up, it got knocked down by this resistance line. Passed through it since 2020 to 2022, and then came back underneath it, had issues passing, so on and so forth. And basically, this is where we're at right now. Now, we did, again, pass it, but came back underneath. This is the line right about here. I mean, I know this might be a little bit confusing in terms of lines because there's just too many of them, but if you're expecting to go to the upside, first, I would expect somewhat of a resistance at the 475 and some change with this horizontal support resistance level that I've seen previously, and you can see consolidation resistance as well on it. Then the next levels would be basically the moving averages. So first there's a colliding of 474, 475 moving average first level, and then 476 and some change for the second level. Then we have resistance of the 477 anyway and some change. Then ultimately, for the most part, going up to 2010, which is 485 and some change. Now, can we go higher? I'm assuming if we did, we would go to this level. It would be 487 and some change. But personally, I'm expecting that 485, 484, but 485 for the most part and some change to be acting quite a bit of strong resistance to the upside, at least for Friday's trading day. Now, for the downside, if you think that is all is doom and gloom, for the most part, then I'm expecting to come down to 465 and some change, which is the previous drop, plus horizontally there was resistance at that level. So again, 465 and some change, and then ultimately potentially come down to 460 and some change. I do not expect to go lower than that. 460 and some change is a touch point right about here. Then previously consolidation support level and resistance levels are right about here, and then a bunch of touch points as well, plus resistance right there previously if I zoomed in. Now, there's that. But again, mind you, everything's going to be dictated by the inflation numbers coming out for Friday morning, 8:30 a.m. Now, for the Dow Jones, surprisingly enough, it created a new all-time high, which is impressive because two spike ups at the 41,400 and some points basically was the previous all-time highs, and it could not pass that level. And it already passed it, hitting pretty much about 41,600 points almost. Mind you, closed at 41,335 points. And if you're expecting to go upside, again, I'm expecting that 41,500 and let's just say pretty much 41,600 points is going to be causing issues to break through. But then on the downside, you'd be expecting pretty much support on potentially around the 41,100 points, give or take. And then this downtrend resistance line that could act as support with the moving average pretty much almost hitting it, about 40,700 points, and then the 40,660 points with the moving average just in case. Now, this upward trend resistance line could act as support as well, which is about 40,520 points, but pretty much 40,500, I would say. And then this last moving average about 40,300 points, give or take. That's basically it for today's video. Hopefully you guys enjoyed it. Hopefully you guys liked it. If you did, consider dropping a like. It does help with the channel. So thank you so much for that. And I do post the videos daily, so I highly encourage you to follow and subscribe if you want to be notified when I do upload my next video. Thanks again for watching. Appreciate it. Take care. God bless and peace.